Sudip Bandyopadhyay as well joins us on the show to talk about what he's making of the market right now. Sudip, hi, afternoon. Would you say that the fall today seems more global in nature?
Well, definitely it's global in nature. If you look at the market, Aisha, since Monday, I think global markets have been correcting. And, we've been holding somehow from Monday till Thursday. And today, I think, Indian markets also have taken a beating. There are fears around the US non-farm payroll data, which comes out in the evening. And there's a bit of nervousness. Also, supposedly, there is little concern about this the non-compliant FIIs exiting Indian markets, and because from Monday onwards, either they have to be compliant or they need to shut shop. So there is a bit of confusion around that. Not sure what is the impact exactly, but general sense of nervousness is there in the market. I think all these things together with the fact that Indian markets were at all-time highs, created this correction. I don't think I'll be too perturbed. I think at such high levels, and after markets has rallied continuously for a long period of time, bit of correction, profit taking, whatever we may choose to call it, is good for the market's health.
Be attributed perhaps to what's happening across the globe or those SEBI norms or the FPI deadline. But come Monday, it will be a lot about what's happening with the GST meeting as well, because that's an important factor to watch out for. In fact, my colleague Sumit Chaturvedi will join us to talk to us about what the key expectations are from that GST meeting, because a lot of recommendations are on the table, like perhaps the reduction of GST on health insurance, etc. What actually comes about, we'll get to know on Monday. But Sumit, what are the expectations?
Well, on coming Monday, September 9, GST Council is going to meet once again, and a number of issues are on the radar of the Council. Most important being the GST on health insurance premiums. Well, as far as sources are concerned, they are telling us that Fitment Committee has not been able to form any concrete opinion on health insurance premium, and the matter will now be discussed in GST Council only. Well, definitely, state exchequer and the centre also, well, they will lose a lot of revenue, and it is to be seen whether that revenue would be foregone by the states or not. That's the one important issue. Other issues that can come are taxation. When it comes to taxation on Infosys, taxation on foreign airlines, taxation on shipping lines, these issues would be discussed. Some relaxation on that front can come. Some other issues that can be discussed are metal scrap, tobacco products. In FMCG, some form of namkeen can also be discussed. GST on those issues can be discussed, on some medicines as well can be discussed. So these all issues will be deliberated upon in September 9 meeting. But most important is going to be the GST on health insurance premiums. Well, we all know that has been a political debate after the Congress demanded GST on medical insurance should be brought down or scrapped. And Gadkari, the part of NDA, also Road Transport Minister, he also asked for same. So all eyes are on Monday meeting now as far as GST Council meeting is concerned.
Well, yes, waiting by for that, and you're going to have a busy Monday, Sumit. But what about you, Naresh, from the entire insurance vertical, apart from HDFC Life? Is there anything else that you would want to recommend?
Financial services, the stock has come back to the highs that was last seen in 2021, consolidating around the 1100, 1130 mark. So that looks promising. And Life Insurance Corporation of India, which has been consolidating, has corrected 10-15% from the top at 1000, 1050. That also looks interesting.
Okay, bunch of those names, Max, LIC, all looking good. In the meantime, what's actually weighing heavy continues to be some of the banks actually, SBI, ICICI Bank, Axis. There's, of course, L&T amidst, outside of that pack, ITC, which is lower by about 2%. And then Reliance, wherein the record date for the bonus is still awaited, it's down about 2.5%. Sudip, if the market were to fall further over here, would you look at adding positions to any of the names? And if so, where is it that you find opportunity after a little bit of a correction?
Well, I think one area which you just mentioned is Larsen. I think this is a fantastic story, and with a strong tailwind behind it, whether it's construction, infra, domestic or international, including hydrocarbon. I think it's got a long way to go. So correction is a buying opportunity. I won't be surprised if buying starts coming even today, and probably that's pretty much what is happening after correction. The other pocket, other share rather, which I would probably look at is Reliance. If there is further correction, I think it's definitely worth looking at. Bonus record date is a matter of time; it will be announced, and the way the businesses are poised, some kind of value unlocking in the near future. I know we've been talking about it for a long time, but it's a certainty. The only timing is uncertain. So, for a long-term investor's point of view, Reliance with correction, it's definitely a good buy.
L&T, some of those blue chips continue to be the buying opportunity. But come Monday, we'll also be talking about pharma a lot more, because that US Biosecure Act is something that perhaps will get tabled in the US houses. What comes out is something interesting to watch out for, but it does look like that there could be that business that comes to India, especially the CDMO players. Sudip, is there any specific name within pharma and these CDMO manufacturers that you are watching out for keenly?
I think pharma, which I like, is a domestic focused pharma company. So not really who are dependent on the US market, generic pricing pressure, all these regulations. So something which is outside, which is Mankind Pharma. That's one stock. And post this BSV acquisition, which they have announced, I like it even more. As far as the companies operating in the US in a big way, I see Sun as a company with a more potential price increase from current levels. So from a long-term investor's point of view, Sun does look good. And I would definitely recommend a domestic pharma company like a Mankind.
Right, okay, that's pharma, that's looking good. Kunal, what's your list if the market is going to decline a little further? Any medium-term opportunities that you scout or sense?
Nothing as such on the charts as of now, but in case if it dips down back to that 24,000, say 24,500 kind of a zone, then we could be looking at a different mix of sectors. And I would probably believe that maybe the PSU end of the market, which has been beaten down significantly over the last 2-3 months from the June-July highs, and many of the stocks have corrected by a margin of 30-35%. If in case these stocks correct by say another 10% or so, then I think trying to go for a contra buy over there could be a better strategy, because of the way the sector rotation could play out into these kind of spaces. The FMCG stocks have done reasonably well, and my sense is that many of these FMCG stocks, they still look very attractive in case if they find maybe one more leg of correction. So say the likes of HUL, for example, Britannia, ITC, I think these stocks are the ones which could look attractive.
Point taken. Time now to take the BTSC trades right now. Naresh, what's the buy today, sell tomorrow idea, if any, or is it STBT today?
So one buy, one sell. So first is the buy on Dabur, a defensive bet, stop loss at 640, target price of 660. Second is the sell on Dixon Tech, which has corrected right from the last few sessions and continues to drift lower. A stop loss at 12,300, target price of 11,800.
What about you, STBT, BTST, or a mix?
STBT. So both of them are sell calls, and since the fact that Nifty is closed or closing below the 25,000 mark, expecting follow through downtick for the index. So two sell calls. The first one is a sell on Petronet. That stock has confirmed a break down below its 50-day moving average, as well as a break below the 360 mark. So keeping 360 as a stop loss would suggest a sell with a target of 344. And the second would be a sell on IGL. The stock has yet again confirmed a reversal after a mild uptick couple of days back. So expecting this to convert into a short-term downtrend, targets of 525, stop loss at 554.
Just want to check in on Vodafone Idea. Given that Goldman Sachs in their note yesterday, they maintain a sell, although they've hiked the target price now on this one. But they're saying that the path to FCF break-even and the market share recovery is very unclear, and that they see another 300 bips share loss for the company over the next 3 to 4 years. This stock, of course, is tracking quite hard. And Sudip, do you think in these kind of market shake-offs, one needs to be extra wary of some of these two-digit kind of names? This along with maybe a Yes Bank, GMR Infra, etc. They're the ones which are really getting clobbered hard today.
Well, Vodafone Idea is a different story, Aisha. I have been always saying it's not for the faint-hearted. It's for somebody with a really aggressive investment strategy can look at Vodafone Idea. Look, the way I look at it, there are two issues. One is a balance sheet issue. The other is the operational issue as far as Vodafone Idea is concerned. The balance sheet issue, yes, it has been repaired to an extent, but the AGR dues of 70,000 crore plus is a huge burden around it. Now, there are expectations of some relief from Supreme Court, and whether the relief will be 50%, 60%, 40%, or at any relief at all or not is a big question mark. Now, if you assume there is no relief, I think it's a disastrous situation for Voda idea. Now, if you assume 50, 60% relief, okay, things improve significantly. Now, beyond balance sheet, I think look at the operational part of Voda idea. I think consistently they have been losing customers month on month. Now, this cannot be a good news for a company which is consumer facing and retail. So this is a serious issue which needs to be repaired, which needs to be contained. The sooner the better. Now, if this continues beyond a point, I think it is disastrous, and it has been continuing for very long. The fundraising has happened, but in spite of that, month on month, they are still losing customers. This needs to be plugged. Now whether either of these or both of these or one of these will happen or not happen is in a realm of speculation. So yes, things can improve significantly, and you can get a better valuation. There are brokerage reports giving 20 plus value. And there are brokerage reports, as you just alluded to the Goldman report, they're putting a value of $2-3 to Goldman. So the range is quite wide, between 2 and 20 or 20 plus. So, you can see the situation. It is a big speculators or speculative investors, play field as of now.
Okay, point taken. So that's the latest coming in on Vodafone Idea. Not really for the faint-hearted. But in the meantime, before I bring on the voice of, Mirai Asset Management as well, if we can, let's pull up the soundbite of what CLSA's Vikash has to say, because a lot of action as far as OMCs is concerned. There's this fresh speculation at work, perhaps whether there is a case to be made for oil prices and the petrol and diesel prices for the consumers to be cut or not, given the fact that the oil price or the crude price have come off materially from $80 per barrel all the way to 72, and if there are some technical indicators to watch out for, it can perhaps go even below the mark of $70, which makes the case for a price cut for some of these petrol and diesel companies even more. We'll try and put up that a bit more, but before that, Sudip, your word on the oil marketing companies, because they were seeing a great amount of traction this year and over the last 12 to 18 months. Do you think some of it could get undone if there is a price cut perhaps?
Yeah, obviously, to an extent, it will get undone. They have been enjoying, the oil prices have been stable and with a downward bias. Under the circumstances, oil marketing companies have been really getting the benefit of that. And a lot of the under recoveries of the past have been covered. In fact, they have started making money. So elections are around the corner in key states, and there is always the threat of price cut looming. It's also fair that prices have come down, global oil prices, so prices should come down from a consumer point of view. And with elections being around the corner, that threat is real. So under the circumstances, yes, one needs to be a bit cautious as far as BPCL, HPCL and others are concerned.
There are 3-4 factors which we need to budget in this. One thing is, yesterday OPEC Plus group has not moved for rolling back the voluntary production cut which they had for almost another 2 months, which was expected that they will probably roll back the production cuts. And so that the fall in the crude prices was also in anticipation that there will be an additional supply of crude oil. And I think OPEC has reacted to that fall in the prices and trying to support their base price on that. That's number one. Number two, the market prices have been fixed for quite some long time. So it is an expectation on the consumer side, on the government side, that there will be a possibility of reduction, especially considering the assembly elections which are coming timing-wise. But we also need to factor in that the refinery GRMs have been weaker, and if you will see, the Singapore GRMs were negative yesterday after a very long period of time. So cracks had been under pressure on the refinery side. Now, whenever the cracks are under pressure, the refinery margins will be under pressure. The marketing margin, if the market prices are same, then marketing margins will be better. But if we reduce the marketing margins also, in that case, we need to see an overall basis. And I think instead of reacting suddenly for a sharp fall, it may be good to watch a little bit and then move forward on that. considering that what is the reaction of the market on the crude prices after the OPEC's announcement yesterday.
Right. Okay, that's the take coming in on, the benefit for OMCs with the crude price decline. The other pocket which has been holding out, or at least that was the case yesterday, was definitely the OMCs as well as the tires. The entire crude sensitive pack reacted for sure, given that crude prices have been on a declining trend for the past 3 consecutive months now. But Sudip, do you think the concerns why paints as a sector began lagging because of heightened competition then in the sector, do you think are they behind us? And now with the crude prices being a trigger, one could see perhaps some bounces coming back.
Definitely not. I think the challenges as far as the paint sector is concerned, particularly with the established player, is real. I don't think it's going to go away in a hurry. With the entry of Birla Opus, the game is going to change, and the leaders in the industry, like Asian Paints, they will definitely be under pressure and probably lose market share. These temporary blips in oil prices will not have any significant effect, at least as far as the competition is concerned. In any case, one has to remember that the oil price impact comes with a lag, quarters lag, almost a quarters lag. So immediate impact on Q2 may not be there. By the time the Q3 ends, there will be many more changes in the sector with competition hotting up. So I don't think I will get excited about the paint sector with oil prices coming down.
On that note, we let you go. Thanks so much for making time and speaking with us today. But time now to hear out the comments.
If you like this video, then like, share and subscribe to ET Now.